All right, what is up, traders? What's up, tycoons? Super excited for today's video. Gonna give you guys a quick TLT update. But before we do and jump straight into that, I want to talk about retail. Okay, retail traders bought a net $77.7 billion in equities and ETFs on UX exchanges in Q1. We've seen an extremely bullish Q1, and this has only been topped out by the first quarters of 2021 and 2022. So it seems that, the whole wash sale and tax loss harvesting really does have a big effect. And we do tend to see a lot of buying from retail in Q1, right? 2022 was a bear market and that still topped it out. 2021 was a bull market and that still topped it out. But even right after that bear market in 2022, investors were very bullish on the market, or at least just looking to get back into some positions after perhaps tax loss harvesting in Q4 of 2022. So I'm going to go over a couple different reasons why some people are bullish. Perhaps maybe they're not just tax loss harvesting, but also, there are some reasons. And there are some reasons to panic in the market too, okay? Everything's not all green and roses just because the market has been extremely bullish in the first quarter. Now, TLT guys has been just super volatile, right? We're seeing TLT drop by 2-3% one day and then rally by 2-3% the next day. Okay, and a lot of people aren't really sure why it's so volatile, and I have one simple answer. Okay, and it's actually a really simple one. The bank collapses. Okay, it's that simple, guys. You have to realize that with Silicon Valley Bank in particular, a large portion of them, collapsing, if not the main reason, besides the bank runs and, depositors withdrawing their cash, was simply because of their treasury positions, right? And so a lot of, companies, institutions, banks, different things like that, they're underwater on a lot of treasury positions, right? And so some of them are being forced to liquidate, right? And they need cash and they're having to liquidate. Okay. And we're talking huge amounts of money, right? So these massive liquidations are going to cause massive volatility in the bond market, right? It's just that simple, right? When you have these people selling tons and tons of treasuries, to liquidate a position and raise some cash, you're going to see really big swings in the market, right? And especially in something like TLT. So I just kind of wanted to go over that, right? This is my Thinkorswim platform for TLT. And yesterday I started actually buying the dip in here, right? I had a demand zone. Now, of course, we blew right through that demand zone, right? I'm not really a perfect trader. No one ever is, but I did actually start to add more to the position down here. And you can see TLT has skyrocketed up today, right? Those call options went up over 100% today. I got the 105 strike calls. You can see that those are in the money right now, meaning that TLT is above 105, right? If we just take a look, those things went up big today, right? One of the traders in the Discord also got some TLT calls. He sold his at about 88%. We won't focus too much on that. But just kind of wanted to let you guys know what I'm doing, right? Now, one of the reasons why, actually, let me show you guys, okay, why I bought TLT yesterday in the middle of the bloodbath. Well, first off, look at the relative strength index. This green line right here is oversold, right? And so anytime that TLT has been extremely oversold on the 1 hour chart RSI, it has been a good swing trade opportunity. So, I started a position there, added some more down here. All right. And then kind of just sat through things as really TLT just continued to sell off. I mean, yesterday was insane, guys. TLT went from like 105.50 all the way down to 102.84. Extreme bloodbath there. And I bought into the pain, and sometimes, you get rewarded, sometimes you don't. But the reason being was not only that, those super oversold conditions on the RSI. I've got a level here on the MACD of -0.5. And typically from what I've seen on the 1 hour chart is it's a potential good buying opportunity. Whenever TLT comes down to here, you usually get some type of a bounce. Now, usually it's not always going to be a huge 2% plus move, but it is a good buying opportunity. And same thing here with the momentum SMA indicator. When it gets down to about -1.71, I'm looking at potentially going long there because on the 1 hour chart, that's been a good area where, it starts to bounce, around those areas. Now, of course, it went below all of those key areas yesterday, right? If we highlight them individually. So, and those call options were down a bunch yesterday, right? I mean, they went down huge. I think they went down about 40%. But I was able to close those for the green today, which was nice. Now I didn't time it perfectly, and I wasn't able to sell the top, but not really too focused on that. So I do like day trading and doing small intraday trades, or like 1 or 2 day swings on TLT. And the reason being is because the macro picture isn't very big yet, right? I'm not really looking for any long swing trade positions. If we take a look at TLT on the daily time frame, okay, what we can see here is we have this large wedge forming, right? Indicated by these two trend lines. This is really the bigger picture that I'm paying attention to, right? The chart is scattered with gaps up to fill, scattered with gaps down to fill. Direction's not clear right now, and we are tightening in this range, right? And so eventually we're going to get a breakout to the upside or a breakdown to the downside. Things just haven't been too clear. Now, we also bounced off of the bullish divergence trend line there yesterday, which is somewhere that the market has been bouncing when it comes to TLT. If you don't know what bullish divergence is, real quickly, look at these two circles. We have what's known as a low and then a lower low, right? So price action going lower, but the RSI, remember, this measures the relative strength of a stock or index or whatever it is that you're looking at. We have low and then we have a higher low. So we were building higher lows, increasing in relative strength as price action was going lower. All right. And then we saw a very strong push to the upside, right? I also got 80% on a 1 day swing trade here as well, right? Entering on this day and then, catching the move up. Right. And then if you take a look, we came back and we bounced again off of the bullish divergence trend line right over here. And we saw a strong push to the upside. We also formed a double bottom indicated by these two yellow arrows. And that was another really good trading opportunity. And then here again, you can see we just barely dipped below that trend line, but we basically bounced right off of it and saw a strong push up. So, that's kind of like overall some of the signals that I'm looking for on TLT, right? If we continue to hold off of this trend line, it's possible we continue to hold upwards and try to get a breakout. But if we do end up breaking this bullish divergence trend line that initially we've been bouncing off of about 2, 3, 4 times, then there's a strong chance that we end up breaking through this bottom trend line here, right? Now 102.88 and 106.29, those are really the big levels that I'm paying attention to, right? As you can see, we haven't really been able to get above 106.29. Anytime we do, we end up dipping back down below, and we haven't really been able to get below 102.88. If you take a look at yesterday's bloodbath, that's right around where we found support and then started to push up higher. So we should get some clearer things painted for us on the big picture over the coming weeks or months. Another useful thing to use is the MACD indicator. Whenever this crosses to the upside on the daily time frame, it's been a good buy signal. And whenever the red line crosses below, it's been a good sell signal, right? And that's something that I've been using for some of my swing trades as well on TLT. If I'm looking to swing things for, more than just a couple days, the MACD has been a pretty useful indicator up until here recently, right? If we look, it's very choppy now. It's going below, up, and it's really just sitting right there with the yellow line. So maybe we get some clear direction here. Maybe we get a strong buy signal and we start really to see it create some space between that yellow line, or perhaps we see it trend lower and really create some space below there. And that should help give us a little bit more clarity too as well. Now, I mentioned, why there's a couple of reasons to panic. One thing is greed eventually replaces fear. Okay, this is known as GERF. All right, and so there's been lots of fear in the market. This is the VIX index right here, the volatility index, and we can see it's had huge spikes. But really, since Q1, we've seen the VIX at really historic lows. We haven't really seen the VIX this low since the bear market really began in Q1 of 2022. And so a lot of people's fear, has been replaced by greed. And we'll go into some charts towards the end of this video and some data showing like, hey, maybe why some people are a little more bullish and why their greed could perhaps get replaced by the fear. But I think that there's been a lot of FOMO and just a lot of greed in the market now starting to come back as, they pretty much sat through a bloodbath in 2022. And, they're feeling like they missed out a lot of the gains. And so we could be seeing, just a lot of this buying could be FOMO. It could be short squeeze. There's a lot of shorts in the market. And as the market continues to push higher on these low volume rallies, that suggests to me that we're seeing a lot of short sellers actually just, closing their short positions over and over and then trying to re-enter a little bit higher and then going over. Right. This is the VIX divided by VVIX. And so what this is basically a ratio of the VIX chart, which is the volatility index, and then the VVIX is the volatility of the volatility index. It may seem like I'm overdoing things here, but really what this ratio chart does is tells you when when volatility is cheap to purchase, right? And so we saw VIX, and I suggested VIX call options right around this area, just as a good way to hedge a long-term portfolio, right? I don't have those necessarily, but it was just kind of a suggestion play in the Discord. It was like, hey, maybe you want to look at some VIX call options dated far out in September or something like that. Kind of just sit on those because volatility was really cheap, right? And so markets tend to move you get these 5-wave impulsive moves, and then you get correction waves, right? So we got a very strong 5-wave impulsive move here, and this is when volatility was extremely expensive to purchase, right? And then we saw an ABCDE triangle correction. And this pattern isn't confirmed, right? I mean, this could turn into something else. But if this is a 5-wave structure followed by an ABCDE structure, a correction wave, then we could potentially see, the price of volatility really rise up a bunch. It would look something similar to this. So definitely something that I'm just cautious of right now. If you follow the 50K portfolio challenge videos, I did sell a lot of stocks in there recently. And I'm just trying to look for some good different things to look at, right? I'm not really too anxious to buy into anything or really trying to FOMO into anything. And if I miss the bottom, then it's fine, but if we get a pullback, those profits that I saw, they don't really dwindle away, right? Kind of mostly cash right now in that portfolio challenge. This right here is the VIX 9-day. So this is the 9-day volatility index. This is something that I'd like to use a lot more on a day-to-day basis because this essentially is going to cover the volatility in the market and what the option volatility is doing over the next week or two. All right. And you can see that in 2022, when we hit all-time highs, this is where the VIX 9-day was, right? It was extremely low. And we actually came back and tested that demand zone here recently at the end of April, right? And so I was seeing and I was telling people, like these things are going to go back up, in my opinion. And we can see that the VIX 9-day has gone from $13. It's currently at 18. It spiked all the way up to about $21. So huge push there, about a 50% push on the VIX 9-day from those recent lows to the highs. And that's just some of the stuff that I've been looking at, guys. Okay. Now, if we go into some of the data, right? If they didn't scare you out in 2022, they might wear you out. Okay. And so we may not see a huge correction. We could come back down and retest the lows, but things could just get very choppy, right? And so, a lot of people who, got scared and or didn't get scared and didn't sell out and remained invested throughout this market, they may be looking for Q1 of 2023 to repeat throughout the entire year. And once they see some chop and some drop, they may end up getting worn out. Essentially, is kind of what this graph is going from. This is from Alpha Trends. This is alpha trends as well too. If you understand market structure, there's basically 4 phases, right? You have accumulation, you have markup, distribution, and then you have the decline. And we went through the accumulation and the markup. This is the bullish phases of the market. And last year appears to be distribution, right? We had that move down. Okay. And then now if we could just consolidate, that's pretty much exactly what distribution is. And it's very possible we could get into the decline. This is why there's many bears in the market. There's many bears on CNBC saying that we're going to retest the previous lows. We're going to break through the previous lows. And that would coincide with this market structure, right? That basically we're in distribution and that we're not already in the decline and already saw the decline. They're saying that, hey, potentially the decline part is still going to come. And rather, we're just right now in that distribution phase. So, these are some of the things that just have me personally a little bit cautious to really be going super long in the market. I'm fine with missing the bottom and really just trying to, be able to sleep at night, really, honestly. Now, I mentioned, this is some of the bullish data we went over in the beginning of the video. I mentioned that it could be largely due to tax loss harvesting, right? And so selling a lot of stuff towards the end of the year and then buying back into those positions towards, the beginning of the next year, right? And that seems to be kind of be a pattern if we're seeing that in 2021 and 2022, we're also seeing really high first quarter buying. Now, 2020 was the COVID crash. So, there was tons of sellers in that market. So that's kind of why we're not seeing that. But really since 2020, retail traders, because remember, this is retail right here that we're looking at, they came into the market in 2020 and haven't really left at all. All right. It's much higher than all of the past year, levels much higher. And we're seeing a continued pattern of, just really big buying in the first quarter. And I kind of explained why I think that. Now, some people are bullish, all right, and there's an example of the less bad concept right here. And so this is the Bloomberg Intelligence Index, and one thing that they're saying is that things may not be as bad as they seem. In fact, according to a Bloomberg intelligence model known as the Economic Regime Index, the worst of America's economic pain appears to have happened months ago. The index analyzes monthly changes in key inputs that factor into calling a recession, including capacity utilization, jobless claims, manufacturing, and sentiment. It indicates that an economic downturn possibly started in June and bottomed in December. While the model still signals weakness in the economy, as long as it stays above its late 2022 lows, the outlook is favorable for the S&P 500 index. And so we can take a look here at this index and kind of just dive into it a little bit more. And these are those those big lows that we're talking about, that they're talking about eventually, right? This is, the COVID pandemic here. This is the, 2009. All right, this is 1990, and you can see, once we hit these levels, it tends to start bottoming out and start recovering afterwards, and that's just kind of what this data set is implying, right? If you look at the same index on the 6-month average, we also hit some very low levels that we haven't hit since 2009, 1990, since the 80s, as well as 75. Okay, so this is just an example of some of the data that the bulls are looking at, right? And some of the reasons why they're saying, hey, maybe things aren't as bad. Maybe we should be, buying these dips and really trying to push the market up higher because, things may be less bad than it seems. Another one right here is the S&P 500. And so what we're looking at here essentially is the S&P 500 weekly chart from 2000 to 2023. All right. And we're paying attention to it when it's above zero for 12 weeks. And they're talking about this indicator right here, the TSI indicator. And so these green lines are kind of like buy signals. And so you can see here, they got the buy signal when it's above there for 12 weeks. And then the market continued up to rally, right? Same thing over here in 2009, we saw the same thing, and then the market went back into a bull market. And so they're essentially saying right in this time period is where we could be perhaps seeing that same signal, and that perhaps we could be starting another bull market, right? Now, another thing that a lot of people are bullish on is the Fed pivot, and anticipating Fed rate cuts. I've dropped lots of data and analysis, and I don't believe that we're going to be getting a Fed rate cut anytime soon. It is possible that they come at the end of the year, but based on my, just analysis and overall sentiment, Jerome Powell has pretty much been saying that the things that they're doing right now with interest rates is stuff that's going to change how interest rates are looked at and inflation is looked at over the next decade, right? And or really for decades. And so my interpretation of that is, rates are really going to be higher for longer. I think that inflation also is going to be higher for longer as well. I don't think that they're going to continue raising rates at such an aggressive pace. I think that there's, for sure one tomorrow, maybe another one after that. Okay, but I really just wouldn't be surprised to see them pause sometime soon and just leave rates elevated, right? To me, if inflation is going to be a lot sticky, and if you look at the core sticky CPI chart, it's super sticky, right? And it really hasn't gone anywhere. We've seen a peak in regular inflation in the regular CPI, but when you look at the core sticky, it's extremely sticky, and it's sticking around in a lot of things like service related areas, as well as some others. But, I just think that it's very possible we could have a new kind of shift, okay, essentially where, interest rates are going to be higher than people are used to, inflation is going to be higher than used to, and eventually the market's going to get used to that, right? And it's going to learn how to price things in and evaluate things, in those new conditions that we've shifted to, and, we will go through another bullish phase again. Just because inflation stays higher and interest rates stay higher, doesn't mean that we have to only see a bear market until a Fed pivots. It really starts aggressively cutting rates. But, until the market really knows how to value higher rates for longer and stickier inflation for longer, there's some reasons, in my opinion, to, be cautious. and not to at least have some type of a hedge if you're trying to go long the market, or just invest in some other cheaper type things, or not cheaper, but less risky things, such like the short-term treasury yields. Okay. You can get some really good yields, and those are pretty much risk free. You just have to hold them to maturity, and you can capture that money. So, of course, none of this video is financial advice. I'm not a financial advisor. Trading in any commodities or stocks or bonds or cryptocurrency all involve a significant risk of loss. It's not suitable for all investors. So, not telling you guys to become traders, but really just trying to go over, some of the main things that I'm paying attention to in the market. And I try to keep an open mind and not remain too biased. I can see why bulls are bullish. I can see why bears are bearish. And eventually one of them are going to win. The Bears won in 2022, but a lot was priced in 2022. Okay, why do you think the market fell so much? They were pricing in a lot of the problems that we're seeing in 2023, and maybe perhaps that's why the market isn't crashing so much, because they already priced in a lot of these problems. Maybe they're looking for new problems. One of those new problems could perhaps be not getting the Fed pivot and not getting the Fed rate cuts that they're anticipating towards the end of the year. But if things continue to go the way they are, I think that inflation and interest rates are both going to remain elevated, and we're not going to see really a sharp decline in either one of those. So that's it for today's video. Hopefully you enjoyed it. Smash that like button, subscribe to the channel.